You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 4th day of March, 2026. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room, so that one's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us at the top of the hour, he'll walk you through the steps. It'll take you about 3 minutes of your time. We'll get your indicators up and indicating today. Your free trial will officially start tomorrow morning when the live training room opens, and will run all the way through next Wednesday afternoon. 5 consecutive trading days. The weekends don't count against you. And there's no credit card required. We want you focused on what's being taught so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. So be sure and stick around to the top of the hour if you haven't taken the trial yet, and Michael will walk you right through it. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the noon broadcast, which is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form. You're done. What happens going forward is every trading day, you get an email about an hour before the broadcast starts. In the email, you'll find a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit of doing it that way is you immediately have access to the question box, so you can ask questions and participate in the discussion. Now, there will be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial radio network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. Now, if you're new to our neck of the woods, it is a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips because you can see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. As I mentioned, Michael will join us at the top of the hour, right around 1 o'clock Eastern. He'll give us a recap of everything that happened this morning in the live training room, and then do a little live trading as time and the markets permit. For now, we'll start where we do each and every day with our daily devotional. The topic that we're on, we took a little break from the topic we've been on. It's a lengthy topic, about 30 days. I think we're on day 8. Took a little hiatus yesterday, but we're back today on the same topic. God, where are you? Our scripture is Jonah, chapter 1, verses 1 through 3 from the NIV translation. The word of the Lord came to Jonah, son of Amittai. Go to the great city of Nineveh and preach against it, because its wickedness has come up before me. But Jonah ran away from the Lord and headed for Tarshish. He went down to Joppa, where he found a ship bound for that port. After paying the fare, he went aboard and sailed for Tarshish to flee from the Lord. And if you grew up going to Sunday school, well, you certainly know how that story ends, right? If you don't, well, hopefully today's devotional will encourage you to read the book of Jonah and see how thousands of years later it applies to your life today. Have you ever received an assignment you absolutely didn't want? A task that went against everything you felt was right or fair? Well, Jonah got the ultimate unwanted assignment from God. Go to the great city of Nineveh and preach against it. To understand Jonah's horror, imagine being asked to evangelize your nation's most brutal enemy. Nineveh was the capital of Assyria, known for extreme cruelty, torture, and oppression of Israel. This was like asking a Holocaust survivor to preach salvation to Nazi Germany. Jonah's response was immediate and disobedient. He boarded a ship heading in the opposite direction. But you can't outrun God's calling. A violent storm threatened to destroy the ship until Jonah confessed his rebellion and was thrown overboard. And in Jonah 1:17, you'll read the Lord provided a huge fish to swallow Jonah. And in Sunday school, it was depicted always on the felt board as a whale. Now, God didn't do this as punishment, but as rescue and opportunity for reflection. After 3 days in the fish's belly, Jonah prayed with newfound humility. Yeah, 3 days in the belly of a whale, that'll do that. What was God's response? We find it in Jonah 3:1. The word of the Lord came to Jonah a second time. Go to Nineveh. God had a message for Nineveh, and he wasn't going to abandon it. God doesn't abandon reluctant servants either. He gives second chances. Even reluctant obedience is still obedience. And remember, God prefers obedience over sacrifice. What happened next shocked everyone, especially Jonah. The Ninevites believed God. Jonah 3:5. From the king to the cattle, the entire city repented in sackcloth and ashes. God saw their genuine remorse and relented and did not bring the destruction he had threatened. Jonah 3:10. Now, Jonah should have celebrated, but instead he was furious. Isn't this what I said, Lord, when I was still at home? This is what I tried to forestall by fleeing. Jonah 4:2. He knew God was compassionate and feared exactly this outcome: mercy for his enemies. God gently corrected Jonah's prejudice, revealing his heart in Jonah 4:11. God said, should I not have concern for the great city of Nineveh? God's compassion extends to those we consider beyond redemption. His mercy knows no boundaries, even for our enemies. So the question is, who are the Ninevites in your life? What people groups do you think are beyond God's reach? Sometimes God's greatest victories come through our most reluctant obedience. His heart for the lost extends far beyond our comfort zones. Let's pray. Lord, when you call us, help us not to run from your voice. Give us willing hearts to follow where you lead and courage to obey your word. Guide our steps so that we walk in your purpose and not our own fears. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. And happy Wednesday. You say the world's in shambles. What do you mean happy Wednesday? Well, every day is what we make of it. And today is all we have. This moment is all we have. So let me give you the numbers from around the world. Then we'll go to the news. Then we'll go to the charts. Starting here in the U.S. with the cash markets, or the indices as they're called. The Dow is up 336 points. The NASDAQ's up 322. That's 1.5%. S&P 500 up 58, almost 1%. The Russell 2000 up 28, just over 1%. Quite a change. In the commodity basket, crude oil down 36 cents, trading 74.20 last. Gold up $38.50, trading 51.6220 last. Silver up 50 cents, trading 83.97 last. In the Asian markets at the close, the Nikkei down 2,033 points, over 3.5%. Shanghai down 40, almost 1%. The Hang Seng down 518, well over 2%. And in the European markets at the close, FTSE up 83, almost 1%. The DAX up 414, 1.75%. And the CAC up 63. So we had a red day in Asia. It was a green day for the UK. And so far, it's a big green radio Wednesday here in the US of A. So let's take a look at the global news. And we'll go to the Wall Street and Capitol Hill. The U.S. embassies are the U.S. shut embassies in 3 Gulf countries, Beirut, Kuwait, and Saudi Arabia, yesterday, amid this ongoing conflict with Iran. The U.S. State Department encouraged Americans in 14 countries, including non-essential staff in 6 Gulf embassies, to depart immediately. The update came as President Trump said U.S. munitions were in hefty supply, potentially allowing the war to continue as long as it takes. Israel, meanwhile, sent ground troops into southern Lebanon after Hezbollah launched rockets in response to U.S. and Israeli strikes in Iran. You know, Hezbollah is funded by Iran, so they are fighting for their life physically and financially. Hezbollah is an Iranian allied militia which pledges allegiance to the country's supreme leader. Israel said it destroyed at least 70 of Hezbollah's weapons storage facilities as of this writing, and also claims to have killed the group's intelligence chief. Among over 50 people reportedly killed. Separately, the Iranian Red Crescent reported a death count of 787 yesterday from the U.S. and Israeli strikes in Iran. The conflict sent oil prices up as high as 15% as of this writing. However, things have calmed down, and we'll get to the news article that explains that in just a bit. Now, if you want to upset the American people from across the globe, how could you do that? Maybe you stop those little brown boxes from showing up on people's doorsteps. Yeah, I'm talking about the Amazon man. How many times a day does he come to your house? Well, apps and digital services in the United Arab Emirates are reporting outages following drone strikes on Amazon Web Services data centers in the country. And as we know, everything's connected, so is it going to affect things here in the U.S.? Well, we'll see. Amazon Web Services said late Monday that 2 of its data centers in the UAE and a facility in Bahrain were damaged by drone strikes, taking the facilities offline. So, we get it. I'm okay if the man never shows up again. I'm talking about the Amazon man. I got a Walmart within a couple miles. I can walk there if I have to and get what I need. My needs are pretty simple. Colin Gray, the father of a teenager accused of killing 4 people at a Georgia high school in 2024, was convicted yesterday of 27 counts, including second-degree murder and involuntary manslaughter. He faces up to 180 years in prison. Prosecutors said Gray gave his son a semi-automatic rifle and ammunition as a Christmas gift in 2023. Ignoring warnings about his teen's mental health and fixation on school shootings, and failing to secure the weapon. Now, when you were a kid, what posters did you have up on your bedroom wall? Maybe Farrah Fawcett? We all remember that iconic poster. But this young man, no fair. He had pictures and posters of mass shooters. Those were his heroes. Those are the people he looked up to. And with that knowledge, his father gave him a semi-automatic rifle and ammunition. My mind. His son, who was 14 at the time, allegedly carried the rifle onto a school bus in a book bag before opening fire on September 4th, 2024, killing students Machen Shimmerhorn and Christian Angulo, and teachers Richard Aspinwall and Christina Arimi, wounding 9 others. The son is still awaiting trial. The news marks the first U.S. conviction of an alleged school shooter's parent for murder. A Michigan couple previously received involuntary manslaughter sentences, while parents in Wisconsin and Texas currently face related felony charges. Now, they talk about the son's mental health issues in this article, but what about the father's mental health issues? Anyway, moving on. Engineers have developed an injectable liver cell mixture that can temporarily take over for a failing liver. This is according to a study published yesterday. The breakthrough could revolutionize long-term liver disease treatment and extend how long patients are able to wait for a donor organ. Tests on mice showed how the liver cell mixture forms connections with nearby blood vessels when injected into fat tissue, forming a sort of satellite liver. Over time, blood vessels begin to grow around the satellite liver, supplying the injected liver cells with the nutrients they need to perform basic functions. Through this work through the entire 8-week study. When operating optimally, the human liver plays a role in about 500 essential functions, such as removing bacteria from the bloodstream and metabolizing drugs. Liver's kind of the oil filter. And I know some people love their liver and onions. I would not be one of those. Where I grew up in the Deep South, You could always tell when somebody was cooking chitlins because it smelled up the whole neighborhood. And to me, when somebody's cooking liver, it's kind of has that same sort of smell to me. Some people enjoy it. I don't like the smell. I don't like the taste. And the first time I went to Africa, uh, I was at a dinner with a group of government officials. And when it was time for the big lunch, as we all sat at the dais, uh, they put plates down in front of my wife and I, and all the officials that were there to welcome us. And it was liver. Yeah, it was liver. I looked at it and I poked it and I prodded it, and I finally nodded the official next to me, who was an African official. I said, "You want my liver?" He goes, "Yes, please." So I slid it right onto his plate, and he was gone in no time. Saved by the day. When my wife saw what I did, she nudged the African official, the Ugandan official on her left, and did the same thing. It was the great liver caper. So anyway, after that, all was well. Okay, moving to the Wall Street news. U.S. stocks opened green today following stronger than expected private payrolls data and a report that Iran has indirectly approached the U.S. to discuss terms for ending the escalating conflict. Oh, now you want to talk. Well, I guess they're probably going to ask you to stop launching rockets first. Maybe talk's still on the table, maybe not. The conflict that has whipsawed stocks entered its fifth day today with fresh strikes by Israel on Tehran as Iran waits the funeral of their supreme leader, killed in the weekend attacks. Worries over the fallout from hostilities helped drive Korea's main benchmark to its biggest one-day crash on record. But stocks gained on Wall Street following a New York Times report about Iran's Ministry of Intelligence approaching the CIA through another nation's spy agency about a possible end to the conflict. That's awesome. Unfortunately, we have 46 years of evidence that you can't trust a word they say. However, U.S. officials are said to be unconvinced by the move, and analysts downplayed the bid to negotiate as it was made soon after the fighting began. Geopolitical tensions have been spurring volatility in U.S. stocks, with dip buyers playing a part as prices tumbled. Some on Wall Street have warned against counting on President Trump to chicken out and rescue stocks. Yeah, this man doesn't chicken out. Now, the reason the advance on stocks seems to have ground to a halt is purely technical in nature, and I will show you that as soon as we make it to the charts. So let's get through the rest of this news. Okay. While the war in Iran started over the weekend, it wasn't until Tuesday that the markets began to register the disruptions ahead. Oil and gas prices rose, stocks fell multiple percentage points, and Treasury yields climbed as traders contemplated the inflationary impact of an escalating war in Iran. I'd mentioned Bitcoin, but boy, the crypto heads have been real quiet during this period of global instability. if it was contrarian and a little clever earlier this week to downplay the potential impacts of an American military campaign against Iran, that dynamic has now flipped and is starting to flop again. And as I said, I'll show you why. It's technical. It has nothing to do with the fundamentals. U.S. private employers added 63,000 roles in February, beating expectations and the best monthly gains since July of last year, according to the private payroll processor ADP. Of course, we got the econ reports this morning. We had a few high-impact reports. Economists surveyed by Bloomberg had expected an increase of 50,000 jobs in February, an improvement from the previous month's lackluster gain of 22,000, which was revised even lower last Wednesday to 11,000, or today to 11,000, but ADP's data showed hiring jumped last month with gains led by construction, education, and healthcare. We've seen an increase in hiring and pay gains remain solid, especially for job stayers, according to ADP's chief economist. But with hiring concentrated in only a few sectors, our data shows no widespread pay benefit from changing jobs. Of course, anything positive, it's got to be downplayed. In fact, the pay premium for switching employers hit a record low in February. Legacy media is hell-bent, along with the left side of the aisle, on destroying America. Imagine if our president had full congressional support. Imagine a world where Jerome Powell dropped interest rates 2 points. Well, keep dreaming. Apple unveiled its MacBook Neo, the company's long-rumored foray into the low-cost computer market. If Apple's ever been known for one thing, it's not cheap. Apple has always been expensive. However, the MacBook Neo, starting at $599, comes in 4 colors, including the splashy yellow-green citrus, and is designed to appeal to consumers, schools, and businesses looking for a more affordable option than Apple's recently refreshed MacBook Air, which retails for basically $1,100. The Neo features a 13-inch screen, a bit smaller than the standard MacBook Air's 13.6-inch display, and runs Apple's A18 Pro processor, similar to the chip that powers the company's iPhone 16 Pro and 16 Pro Max. But because this is an entry-level offering, the laptop comes with only 8 gigs of memory, rather than the 16 gigs like the standard Air, and unlike some Windows computers that come now with 64 gigs of RAM. That means while the Neo will likely run apps and services without any hiccups, if you're looking to do anything more than browse the internet and check your email, if you want to do stuff like video editing, you will still need the more powerful Air or the MacBook Pro. And those aren't cheap. Fears of a full-blown shipping crisis were temporarily averted after President Trump said the U.S. may provide security escorts and insurance guarantees to oil tankers and other vessels attempting to cross the vital Strait of Hormuz. The assurances helped ease surging oil prices as transit through the strait, a critical global shipping choke point that sees roughly 1/5 of the world's oil and liquid natural gas pass through its waters every day, essentially dropping to zero, according to data from Kepler. Shippers had stopped sending tankers through the area due to fears of attack and because war risk insurance had become increasingly difficult to obtain. Effective immediately, President Trump said, I have ordered the United States Development Finance Corp to provide at a very reasonable price political risk insurance and guarantees for the financial security of all maritime trade, especially energy, traveling through the Gulf. The president posted this on Truth Social yesterday afternoon, adding that insurance would be available to all shipping lines. If necessary, Trump wrote, the United States Navy will begin escorting tankers through the Strait of Hormuz as soon as possible. Now, we know the Iranian Navy is on, all 11 ships are on the bottom of the ocean now. But Hezbollah and others, there may be mines out there. So that's the reason for the escort, to make sure the oil tankers successfully navigate. Now, we're talking about 20% of the world's fossil fuels, which, by the way, it's still the main game in town. And from Bloomberg, Elon Musk is slated to testify today in a jury trial over allegations that he manipulated Twitter's stock price with his public tweets to try to get himself a better deal to buy the social network back in 2022. Musk, the world's richest person, eventually bought Twitter for $44 billion and renamed it X, but first spent several months publicly criticizing the company's business and threatening to walk away from the buyout. Sounds like negotiation to me. The United States is close to achieving complete control of Iranian airspace, according to Secretary of War Pete Hegseth, who, as I mentioned, delivered a press briefing this morning. I saw part of it live. He said, starting last night and to be completed in a few days, in under a week, the two most powerful air forces in the world, the United States and Israel, will have complete control of Iranian skies, uncontested airspace. Hegseth explained that this means American pilots will be flying all day, all night, day and night, finding, fixing, and finishing the missiles and defense industrial base of the Iranian military. And last but not least, Minnesota Governor Tim Walz was aware of the widespread welfare fraud in his state for years and repeatedly failed to act, alleges a congressional report released today. Walz and the state's Attorney General, Keith Ellison, are set to testify today about the $9 billion scandal before the House Oversight and Government Reform Committee. The report, which also alleges that Ellison knew of the welfare fraud in Minnesota, draws from interviews with state employees and whistleblowers. I can't wait to see how that discussion goes. And the Bill and Hillary tapes are out if you haven't heard. Those closed-door interrogations, if you will, about Epstein have been made public, and Hillary's not happy. Has she ever been? I don't know. Anyway, moving on. Let's look at Logic 247. That's our 24/7 around the clock Emini alert service. not just E-minis, but also crude, gold, and silver. We're currently in week 396. Over the last 396 weeks, we've issued over 21,600 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on just simple market structure. A simple process we teach all of our passport holders. Now, this is Wednesday. This is where we were on Tuesday. This is where we were on Monday. And last week, we finished the week with 52 alerts issued, 8 never triggered, 44 actionable, 5 stop outs, or 11%. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. So, of course, there will probably be some changes throughout the day. So she'll update the recap this afternoon and post it in the appropriate places in Telegram as she does each day. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued 35 Logic 247 alerts. At the time she did the recap, we were still waiting on the outcome of 8. So that gave us 28 actionable alerts, of which 2 or 7% would have been stopped out, again based on just simple market structure and the simple process we teach all of our passport holders. Now, the purpose of the Logic alerts is to help you learn how to read a chart. If you never actually trade a Logic alert, that's fine, but use it for the purpose intended. That chart that you're looking at, if it looks like chaos, the Logic 247 alerts will help you quickly learn how to turn chaos into clarity. Now, the Logic alerts can come out anytime around the clock, 2 a.m., 2 p.m., as opportunity presents itself. Futures trade around the clock. We got traders around the globe. Our day session is their night session, and vice versa. Now, 396 weeks is a very long time, 7.5 years, a little over. But quite a few years before we launched Logic 247, we had our original alert service, the Concierge Trade Alerts. They're different in a lot of different ways. But for the purpose of this discussion, I'll just say they don't come out around the clock. They're posted as a static report, typically 5 minutes ahead of the Globex open. The Wednesday session we're in right now began last night at 6 p.m. Eastern. But 5 minutes before the markets opened, all of our traders had all of these targets. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let us go to where we start each and every day when we look at the charts and go to the bellwether. That would be the S&P 500 Emini futures, and that's the daily chart, as you can see. So this is today, Wednesday. Now, I said the rally stopped because of technical reasons, not fundamental. We ran into red and falling. And when price rallies up and finds red and falling, quite often red and falling will become resistance. Now, if price is able to get through red and falling, then you've got resistance at the daily BBC. You see, we've been in a pullback that started here. So you had a leg down and then a retracement. 1, 2, 3, 4, 5, 6, 7, 8, 9 days that pullback held. Till yesterday, when we did not touch the BBC. Every one of these days. Now, we did spike on this day, February 25th, and we hit the 50% fib extension to the tick, but we were still touching the BBC. And that means the pullback held. Sent us all the way down here. Now we're trying to recapture. But we got to get through red and falling. We've been trying for hours now with no success. If we get through red and falling, then right above that, that's major resistance. And then the high of last Friday. And before that, you've got the high of the Monday session. The Sunday, Monday. Let's see. This is Wednesday, Tuesday, Monday. Yeah, this is the Sunday, Monday. Okay. Yeah. This is where we gapped way down here. Ran lower and then closed substantially higher, touching the BBC. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Just stands for bull, bear, cross. When price crosses above the green line, we're bullish and expect higher prices. Below the green line, lower prices. Above the green line, higher, lower, higher, lower. Pretty simple. But just remember, no matter what strategy, no matter what methodology you use for trading or what you trade, kind of like gravity just is, the fact that price always reverts to the mean just is. And we make it as simple as we can for you to stay on top of that. Okay. So do we expect this to be resistance? Until proven otherwise. Now, what does otherwise look like? Does it look like this? Not quite. We need a candle to both open and close above the BBC. Then we go from a bearish mindset to a bullish mindset. So the market has some work to do for that to happen. Now, all alerts, both the Logic 247 alerts and the Concierge Trade alerts, are all created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I've used for years. If it ain't broke, leave it alone. There you go. Now, the vertical line separates today, Wednesday. Here's yesterday, Tuesday. The horizontal lines are the weekly trading zones. They're published every Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones for our members for over 16 years. December 14th of 2009. That was the first week we published the zones. And the only thing that's changed is nothing. Not a single thing. Except I used to put both lines out, like this zone's 6841/42. This is 74/75. This is 6910/11. I just started putting the lower line on because I like to keep my chart as clean as possible. So yesterday, where'd the market find resistance? Well, at the weekly trading zone here. First, it found it at the zone here. Now, I showed you yesterday the lowest weekly zone. It's down here. And I also explained that what the zones do is they create a playing field. We're not saying that price is going to go to the highest zone or it's going to go to the lowest zone. What we're saying is we don't believe price is going to close above this point or below this point. And all the lines in between are where you should expect to find support when the market's dropping, resistance when the market's climbing, until proven otherwise. So the opening candle right here last night, okay, we dropped to the BBC. Remember, the pullback holds more often than not. So we got a bounce. In fact, if you look behind the green line, you can see we actually touched the zone. So that's what I call support times 2, the BBC and the zone. So that gave us a leg up, but we ran into red and falling to the tick. Obviously, blue and climbing is bullish, red and falling is bearish. And one of 3 things happens when price encounters a weekly zone. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. As it runs out of steam, price will typically retrace back to the zone it sliced through, then continue in the direction of the slice. Now, because of what I showed you on the daily chart, this is why we're having trouble continuing to move in the direction of the slice. You got to learn to think, to not only use multiple time frames, but think in multiple time frames. Now, if we can take out this high right here, okay, which is directly tied to this high right here from Monday, then our next potential resistance is going to be here at this high from Monday, 68.97. And then right where blue turned to red, 69.06. And then the zone is 69.10.11. That's if we're able, but as you can see, as we've consolidated sideways, look at what's happening to the black step line. It's about to cross to the right side of blue and climbing. When that happens, like it did here, you should expect a retracement back to the BBC. Price always reverts to the mean. Like here, the pullback held. Like here, the pullback held. So if we get the pullback here, will it hold? Couldn't tell you. See, nobody knows what's going to happen next in the market. I don't care what their website says. I don't care what the email you got says. Nobody knows what's going to happen next in the market. And we freely admit that. And we trade what's in front of us, not what we think should be in front of us or could be in front of us, but what is. That's why with the Logic 247 alerts, I give you the scenario for both cases. Price is either going to go up or it's going to go down. Once you identify the windows of opportunity to the upside and to the downside, all you got to do is sit back and wait for price to get there. So we're making another run here at this high of the day. Now we failed to take it out here. We failed to take it out here. If we fail to take it out again, this is like a last gasp effort. But don't forget, you got resistance, potential resistance here, where I just showed you. And here, right there where blue turned to red. Okay, but that's all dependent upon if we can take out that high right there. If we don't, if the step line crosses blue and climbing and we head back to the BBC, then it becomes a question of, does the pullback hold? Like this, like this, like this, or not? Okay. On the Dow, this was the opening candle last night, and we dropped to the BBC, through the BBC. See all this red and falling? When you got that much red and falling chasing price, we know the pullback holds more often than not. See, like here, here, and here. But here's a different story because you got red and falling chasing price. That's when you're most likely to see price trade through the BBC. But it found support to the tick at the short target. And the short target is based on this bullish cross right here. So we consolidated between the BBC and the weekly zone for quite some time. And along came the London Open. And again, the pullback held, sent us all the way up to the weekly trading zone at 48,615/620. We spiked it, but closed below it. Then we made another attempt and actually got through it. Okay, 48,690. Resistance always sends a market looking for support. Support always sends a market looking for resistance. And then resistance sends the market looking for support. So this was a big red candle, okay, right here coming down. This was the 9:30 opening candle on Wall Street. It was red all the way down to where? The bullish cross. See, when the blue line gets above the green line and leads to an extended move, the first time price revisits that area will almost always be good support. What a beautiful example. You should print this chart out and hang it on your wall. So from support to resistance, back to support, we closed above the BBC, the pullback held, and that launched this move, which began at 10 a.m. Eastern this morning, right up to this area where we've been consolidating sideways ever since. Remember, these are 30-minute candles. Okay, the Russell. This was the opening candle last night, and in the first 30 minutes, we dropped to the short target. We opened at 2607. We caught a 4-point drop, and then a little. We actually dropped to 2601. So that would be, I guess, about 6 points total. You only need 2 points to get your goal for the day. Now, this support is based off what? The bullish cross. What? Again? Yeah, again. Support bounces us up to resistance, where? At the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. Resistance is going to send the market looking for support. Where do we find support? At the weekly trading zone published Monday morning at 6:15 a.m. Eastern. And what happens 70% of the time? Consolidation. Red and falling turned to blue and climbing. That took us up to the underside of the short target. Now, when we trade through a CTA target, on the retracement, the underside in this case of the short target can often become good resistance. And it was, and it was. Then we finally overcame it right here, okay? Now, we had a bearish cross right here. You see that high right there? Do you see that? Over and over again. And then we made our run all the way up to the long target. Got a little retracement. Then another push that took us up to the weekly trading zone at 2633/34. Resistance sends the market looking for support. Back to resistance, back to support. The pullback held. We made it through this bearish cross, but I want you to look. We spiked it, but look where we closed. That candle closed right at the bearish cross. Next candle opened and dropped all the way back to the zone, support, and then we made one more push, and that took us to the high of the day. And that resistance right there is not an area where I would have specifically called for resistance. That's why you got to remember, based on the last 7.5 years, over 21,600 Logic 247 alerts, we know that on any given week, 20% or less of the alerts will get stopped out. So this is an example here. Did we expect resistance here? No. Did it happen here? Yes. That's an undisputed fact. Support at the zone. Now we got blue and climbing directly above price. Potential resistance. Okay. Michael is here, so he's going to give us a recap of what happened in the live training room this morning. Do a little live trading as time and the markets permit. I'll come back. I'll finish the recap and wrap things up with our good word for the day.
All right. Here we go.
All right, looks good.
All right. Let me bring this up. Here we are. So, good afternoon, everyone. Today is Wednesday, the fourth day of March, 2026. Now, if you have not taken a free trial with us and you'd like to, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. And click on that. It's going to take you to this registration page where all that we ask for is your name, your email, and your phone number. Down at the bottom, make sure you give us your trading view login ID. Okay, that's what we need to get your indicators indicating on your desktop. All right. Now, results. So today, we ended with 1,087.50, which oddly is $5 more than it was at the halfway point. It's just seemed like we were so close. I think it was 1,083.50 is what we're at the halfway point. Numbers were completely different though. Anyway, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the fourth day of March 2026. We're up 123 ticks on the NQ, 12 on the Russell, 15 on the YM, and 27 on the ES. 1,087.50, as I just said. And this morning it took 6 minutes and 4 trades to get to $1,300. And we took a total of 35 trades with 6 stop outs today. So 82% of our trades this morning were break even or better. You know what? I don't think that's going to work. I put that formula down here. Yeah, because all those are divided by servers. I delete all of those. Then there. So we're averaging 84.69% of our trades so far this month to break even or better. So on the month now, we're $3,505 over 3 trading days, averaging $1,168 per contract per morning session. On the year, we're now at $47,757. Over 40 trading days, averaging $1,193 per contract per morning session. I like that number to stay over 1,200. We had that over 1,200 yesterday, but I think, didn't we? Yeah, we did. Anyway, we'll get it back. If you were to quit trading when you get the goal for the day, this is 24/20 blueprint. If you were to quit trading when you get the goal for the day and you were to add 1 contract per month, every month, that means you have to achieve $2,000 in profit per contract every month. But if you were to do that, right now you'd be on your 3rd contract. You would have, well, so far you would have traded 17 minutes and taken 10 trades. I think that's right. You would have taken 10 trades. You've taken 17 trades and traded for 10 minutes. Is that right? This is the number of minutes. Oh, okay. It would have been 17 minutes and 10 trades. That's correct. And overall, you'd be up on the year $9,802. Okay, $9,802. So far this month, you'd be up $1,170 if you quit trading when you got the goal for the day with 3 contracts on. So I guess this just goes over here. Kind of. Oops, that's got a formula on it. I'll work it out later. Anyway, that's the way all that works. You'd be averaging $244 per hour on the year. You'd be up $9,802.50 if you did everything exactly like I did. Okay, let's get into the trades. Now let's just look and see if we have any trades triggering right now. The YM is just about to trigger on the upside. The Russell just did trigger a minute ago on the downside, but the YM is looking like it's going to give us a long. And nothing else right now. The NQ actually gave a long a few minutes ago that never went into profit, so it's not too late to jump on that if you want to. It's a little risky here because it's already gone down below the prior swing low a little bit. It looks like everything's going to go down right here. But anyway, let's get into it. The Russell today. Well, I know I just said all that really fast, and I don't know if any of you paid any attention to that, but what I suggested was this right here is a little risky now, because when I looked at it, by the time I looked at it, it had bumped this lower swing right here, the red. It had gone down below the red, suggesting weakness, further weakness on that side. Okay, that's why I wasn't too attracted to that trade. The YM didn't end up giving a trade at all. I just want to point that out because I went over that really fast. And sometimes I just rattle things off, and I probably say it so fast nobody pays any attention, or they can't pay attention. All right, well, not a lot of bars today. Well, that kind of stinks. All right, well, anyway, on the Russell, our first trade of the morning, we picked up 5 ticks there. Then the next trade, we picked up, looks like 16 ticks to get us to 21. Then we had a big trade there that got us up to 58. Then we had a stop out, a 25 tick stop out. That should have brought us down to 58 minus 25. I wrote in 18, but it shouldn't have brought us down. 40 ticks. Oh, it's 28. That's what it says, 28. Okay, that's still not right. Should have been 25 ticks. Anyway, we stopped out there. And after that, we went to 33 ticks. They went to 37 ticks, and then we stopped out again down to 12 ticks. So I made some mathematical error in here. It's more than what I have on my paper because I made a mistake subtracting too many there. Since then, it's been really flat and sideways. Not really a lot you can do with this, but we did have some trade setups in here. If you just look at it really quick, there was one right there that worked out. One right here. I mean, they're not going anywhere, but they kind of worked out. One right there. That was it on the Russell. Not a lot of movement on the Russell. Okay, the YM now. Let's hit control back on that. Okay. So the YM, we started off with a big trade on the YM. We had 26 ticks on our first trade. 26 on the first trade, and then compared to yesterday, we were constantly struggling on the YM. Today we did not. We went from 26 to 28, then 28 to 41, then 41 to 48, then 48 to 60, and then we had a couple of stop outs. We went from 60 down to 35, then went from 35 down to 10. Then we had one more +5 somewhere. Got us up to 15. I don't know where that +5 was, but we had one more +5 that got us up to 15. Might have been right here, short right there. And right now we don't have a trade. Okay, there's no trade setting up on the YM right now. There is one setting up on the Russell, though. A down closer on the Russell will be a short. High that is 39.2, so you'd sell 28.2. 38.2, I'm sorry. 37.3 is what you need to sell. Yeesh. 20 ticks below the top of the bar is what you need to sell. We're on a 19 range now. I think it's going to go up and flip the YBR. Everything else already has, but we'll see. On the ES now, you just scroll back like this. We didn't have that many bars on all the other ones. Here we are on the ES. Now we start out on the ES with 8 ticks right there. Then we got 2 more to get us to 10. Then break even, then 3 more to get us to 13, and then we stopped out. Back down to 3. Then we had 1 to get us to 4, and then we had a pretty big trade there, and it got us up to 17. And then 2 ticks to 19, and somewhere we got 8 more ticks, somewhere. Break even. And it was somewhere we got 8 more ticks to go up to 27. Okay, and that was it on the ES. So we're almost ready here for another trade on the ES. We need to get down to the oversold. A down close on this bar and an up close on the next bar will give us a trade on the ES. Okay. That was all that. Times at 109. That's good. Gordon, I saw your email come through, and I saw it yesterday. I was thinking Valerie was going to respond to you, but she didn't. Your question is answered in Telegram. All the stuff that you're looking for is in Telegram. Logic 247 active passport holders group and all that stuff. All right. It's all in Telegram. You don't get emails for it. If I down close here on the Russell. Okay. I'll show you. I'll send you an email that's got all that stuff in it. Valerie should have done that, but I'll send it to you. Okay. Let's see. Next, the NQ was the next one. We got a short here on the Russell, by the way. Here it is. It's going to go 10 ticks in a profit bump to stop to +4. And I didn't think the Russell was going to give it to us because everything else is going up. So we'll see what happens with that. On the NQ now, on the NQ, let's scroll back on that one. I'll hit the control and back on this because we are in that trade on the Russell. And it's got to go down one more tick to get it to +4. There it goes. Okay, so that's a +4. Not as concerned about that now. I don't know where the swing low was on it, but we're at +4. Let me just go look at the swing low really quick. The swing low is at 34.5. Okay, now why is that important? You might ask. There's 12. There's 15. Okay, because 34.5 is where it should find its initial support right there. Okay, but we just took 15 out on that. Now let's go back to the NQ. Started out with a stop out on the NQ. That was -30. It was actually supposed to be -30. Oh wait, I had a +1. I had a +1 somewhere, and then we stopped out and it put us at -35. Okay. Then our next trade was a pretty big one because it put us at +6. And then we had a 10 that got us to 16, and then we had another big trade here that got us up to 64. Then went from 64 to 76. Let's say 76. And from 76 to 86, and 86 to 97. Hey, except for that first stop out, we didn't have another one on the NQ. Then to 97, then from 97 we went to 109. And from 109 we went to 123. And that was it on the NQ for us. Okay. And the NQ actually just had a long trade right here. Let's go put in another trade, and then we'll go through it all again really quick. So that was the morning session, but right now we have today, the 58th day, 3 unlock for 3, 4 on the Russell. We have 15 ticks right now. Copy, paste, paste. It's 1, 0. And how much time do we have left now? 17 minutes. Okay. We'll hit 58 on this. 58. All right. So that's where we stand right now so far. If you have not taken free trial with us, let's go back to that for a minute. That's Forex Factory. That's Forex Factory. There it is. If you have not taken free trial with us and you want to, go here to mytradingiq.com and click on the purple button. All right, that's going to be to this registration page. Just fill out the form. Make sure you use the TradingView login ID down there at the bottom so we can enable the indicators on your desktop. Okay. All right. So let's get into this. The Russell had a long trade here a minute ago from right in there. I don't know if that went enough to get the stop to break even. That's not the Russell, the NQ. The Russell had the short trade over here that we did take. The ES and the YM do not have trades here. So now we just have to wait. Gordon, I have something. I know I had a template created just for that. So let me go and send that to you right now, okay? Yeah, I'm sorry I had to wait on that. But let's see. This is the right email. Compose into you. See, templates. I think Z on that one. That is not it. All right, we don't have any more trades right at the moment, so don't think I'm not watching. I am. Here it is. Here it is. It's got somebody else's email in it, so let me take that out. Save it again. Draft his templates. Save. All right, here, Gordon. It's coming at you now. All right, that's too low. It's not a trade. We're set up to give short trades on all three of these markets pretty soon here. We just need an up close on this one, followed by a down close, two up closes on this one, followed by a down close, two up closes on this one, followed by a down close. The NQ is probably going to drop down and flip the YBR. All right, it hasn't done it yet, but that's probably what it's going to do here. Okay. All right. So not quite a trade there yet on the NQ. It's got to flip the YBR to give us a short like everything else is in the red. We're getting there though. Getting there. All right. Does anybody have any questions about anything? Gordon, you should be able to just click on all those links that I gave you and get right in there. All right, well, we're set up for a bigger leg down now anyway, whenever it does pull back. We almost flipped it here on the NQ. Not quite, but almost. I will, Gordon, at 2:30. You should have gotten 2 emails already, and there'll be another one in about 10 minutes. If you don't have those, then you need to check your spam. All right, we need to pull back there and there and there. Some pretty cool stuff this time. We need the pullback on all three of them. We just flipped the YBR now on the NQ. That's what we were looking for. And the market's just crawling along here. So we'll see. See how things go. Wow. So I was expecting a ton of volatility like we had yesterday. And here we are. It's a snoozer. What does this look like on 100 range right now? This is the whole day right here on 100 range. It's not bad, but it's like one trade every 30 minutes, maybe. It's not going to do. Go back to the 39 for now. And the ES almost has a trade. It needs to hit the mid-band with a down close. The YM needs an up close. Hit the mid-band with a down close. The Russell needs 2 up closes. Hit the mid-band with a down close. Volume is a lot lower. My volume? How about now? How about now? Oh, the NQ volume. Okay, good. I was going to say, no, this is my new headset. Yeah, the volume is really petered out from yesterday. We're almost there on the ES. We just need to go up one more tick, and then we'll be able to trade this on a down close. So we only have the one trade so far. We have 8 minutes left. We only have the one trade. That didn't hit the mid-band. That didn't hit the mid-band. This hasn't hit the mid-band. This hasn't even given an up close yet. It sure is. I've been talking. Yeah, I've been talking. It's just quiet. Really quiet. Eerily quiet. It's like, we're just waiting. We had one trade so far. Here we go on the YM. We hit the mid-band finally. So we need a down close on the YM. It's got a high there of 36. So we're going to sell 16. Okay. Like that. Sell 16. See, when the markets are really slow, I have time to do all this. Make my entries really precise. When the markets are fast, I think I use the drop and the shave and everything else. Okay, so we're in on the YM. Now that's got to go 10 ticks into profit. So we're down to 06 right here to bump the stop to +4. Okay, and if we look down below us, there's not really anything that's, oh, there we go, right there, 80. That's what it's attracting to. On the pullback side, it's all up there at 32. But that's not even to our stop. So we should go down and hit the 80 level down here, which should get us to +4. That looks like it was a lot more of a trade there a second ago. Did it come off the mid-band? I think it did a second ago. Maybe it didn't. I'm seeing things. Wishing things. Okay, so let's put this window back on top. And nothing over here on the NQ, nothing on the ES. The ES is almost gone full cycle though, so it could turn into something. Okay, and I think it's that thing. Cute thing. All right. Well, the ES didn't turn into a trade because it wasn't off the midband. We now have 4 minutes left. All right. I really thought that YM was off the midband. I got down to 08. So I got 2 ticks away from bumping the stop. It should get down to 790. All the way down here is where it should go. Okay. Now that pullback number that I said a minute ago, it just got hit. So our stop is beyond the pullback number. And we'll see. That'll close right there. We could end up stopping out on this. Could happen. We'll see. The Russell's almost there too. If I refresh the Russell. A down close below the mid band on this bar would be important right now. I have to get in the up close right there at the mid band above it on that last bar. This bar really needs to close down or it's going to stop us out for sure. The NQ actually will have a trade on a down close also. Okay. That's got a high of 68. So be right down about 50. 58, 10 points, right? Yeah. It's not a trade here. We did stop out on the YM. It's not a trade on the ES. Not a trade on the ES. It's not a trade on the NQ yet either. Not a trade on the Russell yet either, but it's almost on the Russell. Let's go in here and put that stop out in on the YM. Okay. And we'll see. We only have a couple of minutes left. We'll see if we end up with another trade here. The NQ could still give us a trade here. The ES, not so much. The YM just stopped us out on that one pretty much to the tick so far. And close to flipping the YBR. Close to flipping the YBR. Close to giving us a trade on the Russell. All right. Am I ever talking about my volume? Just want this hit. All right, we're flipping the YBR here on the ES. I'm going to flip it here on the NQ, I think, too. I think I have to wrap up the session, guys, with a negative value. A little bit negative. Minus 500. Use our average down to just about 1.5 times the daily goal. That's what we end up with. That's flipping the YBR over here on the NQ, so you're not going to have a trade there. It's flipping the YBR on the ES, you're not going to have a trade there. It's stopped us out pretty much to the tick here on the YM so far, and the Russell could have a trade here on the down close, but we are out of time. So this is how we're going to end it for this session, guys. Minus 500 bucks. Our average in these sessions for the 16 minutes that we have to trade on average in this session, we're averaging $148 per contract over the last 58 sessions. So if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. Right, that's all you need to do. When you click that, it's going to be the registration page. Just fill out the form on the registration page. Okay, that's all you need to do. And with that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay. Okay.
Oh, okay, let me grab it back.
Alrighty.
Okay, recap of the morning session.
Today, it took 6 minutes and 4 trades to get to $1,300.
Good job.
Thank you. Hey, and the Russell just traded.
Speaking of the Russell, guys, that's where we left off. Now, we've already covered the ES and the Dow, and basically the Russell in granular fashion. If there's any part of today's broadcast that you missed, you can always go to youtube.com/CFRN as soon as I sign off, or a few minutes after, and you will be able to see this broadcast, today's broadcast, in its entirety from start to finish. So we already discussed the fact that in the first 30 minutes, we found resistance at the weekly trading zone. That's what we expect. And we found support at the short target, all in the first 30 minutes. And all of our members had all of these targets 5 minutes before the market opened. Okay. Then we dropped to the next weekly zone and consolidated for quite a few hours. Remember, only one of 3 things happens when price encounters a weekly trading zone. 70% of the time, it's consolidation, like this, even like this. 20% of the time, rejection. 10% of the time, the slice. So, as we consolidate, red and falling gets underneath price and becomes support. Just as when blue and climbing gets directly over price, it can become resistance. So red and falling, the reason it becomes support is because it's on its way to becoming blue and climbing. Obviously, red and falling is bearish, blue and climbing is bullish. So it takes us up through the BBC. Now we know the pullback holds more often than not, but we also know eventually it's going to trade through. Okay. So in this case, we traded through. We hit the underside of the short target, resistance, which sent us back to the BBC and the pullback held. That support then sent us back to resistance at the underside of the short target, which then sent us back to the BBC, and once again the pullback held. It held and took us all the way up to the next weekly trading zone. Now, as you can see, this high right here where we poked through, okay, bearish cross right here. See that? Okay. Again, that's when the red line gets below the green line, leads to an extended move. First time price revisits that area, almost always good resistance. But we finally pushed through, got above this zone, and we took out yesterday's high by not yesterday's high, but the afternoon high. It's right there. See how we took it out by, well, I'll tell you. High there, 2630.9, high right there. 2631.6. Okay, so we took it out by just a little bit, less than a point. Okay, that's a sign of weakness. So no surprise, price drops back below the long target. But we're above the BBC, so we expect higher prices. And so as we drop back below the long target, we find support right here. Is that a spot I would have typically anticipated support? No. But I've already explained, 20% of the time or less, the market is going to do something other than what you think it's going to do once you learn how to read the chart. So support is now going to send the market looking for resistance, which it found at the weekly trading zone, published Monday morning at 6:15 a.m. Eastern. Just as we spiked it here, we closed below it. We spiked it, closed below it, spiked it, closed below it, spiked it, and then dropped all the way to the BBC. Now, we spiked the BBC, hitting this zone 2611/2612. We expect that to be support till proven otherwise. Well, this bounce shows the support. So once again, the pullback to the BBC held. Price always reverts to the mean. In our case, the mean is this green line right here. So the 10 o'clock candle, okay, we had some news at 10 a.m. Eastern, sent the markets substantially higher. Now, this bearish cross right here, we spiked it, but look where the candle closed. Right at that bearish cross from yesterday. When the red line gets below the green line and leads to an extended move, the first time price revisits that area. Almost always good resistance. So we spiked it, came back, then this candle opened and showed further respect by dropping all the way back to the zone, 2633/34. Support is now going to send the market looking for resistance. Is this a spot I would have called for resistance? It's not. It's part of that 20% or less when the market does something other than what you expect it to do based on market structure and your ability to read the chart and understand how price flows, where to anticipate resistance and where to anticipate support. That is the purpose of the Logic 247 alerts, to help you learn. So we get support at the zone, support at the zone, support at the zone, support at the zone. Now we've got potential resistance overhead, the black step line. It's directly above price, so that makes it potential resistance. Blue and climbing, that's potential resistance. If we continue to consolidate sideways, well, one more candle, you'll probably see this turn to red, like that, okay? That's why it becomes potential resistance, because it's most likely on its way to becoming red and falling once it gets directly above price. As you can see right now, the black step line is holding it in check. It's trying. It wants to get through there. Question is, how committed are the institutional buyers? The chart itself is a reflection of how committed they are or how reluctant they are. Let's say we do get through blue and climbing, or even red and falling, if that's what it turns out to, if we consolidate a little more sideways. And we got potential resistance here, 2643. Again here, 2649. And then clear sailing up to the zone at 53/54. Now let's say the resistance holds. We drop to the BBC. Price always reverts to the mean. The question is it going to hold or not? We know it holds more often than it doesn't, but we also know that eventually it trades through. And I get asked this question an awful lot. Well, how do I know if it's going to hold or not? You don't. You wait. But the more red and falling you have chasing price, the greater the possibility that it's going to trade through. or the more blue and climbing that you have chasing price, the greater the probability that it's going to trade through. Okay. You see on this pullback to the BBC, which spiked down to the zone, right? Do you see that? Look at this. There's no red and falling on the pullback. When you get that kind of a pullback, and this doesn't change from blue to red, you want to be all over this baby, because it's going to take you higher. It's interesting that we made it as high as we did after this much resistance. Look, we spiked it and failed, 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 and then finally we overcame. We overcame the technical based on some important fundamental. Now, we're not fundamental traders, we're technical traders, which is why we always teach everyone, news event, major economic report, put the mouse down, make a sandwich, walk the dog, whatever. Do something till the market digests the economic report, whether it's positive, negative, doesn't matter. You don't want to trade the news. You don't want to trade the reaction to the news. You want to trade the reaction to the reaction of the news. Hopefully that makes sense. The NQ. You can see where we found resistance yesterday afternoon, going into the close at the zone. Spiked it but failed, spiked it and failed, spiked it and failed, spiked it, spiked it. And then the Globex open right here. Opening candle dropped to the BBC. Pullback hell. And it launched us right into resistance ×2. Red and falling, and the weekly trading zone. Remember, when price moves up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support until proven otherwise. Okay. So that resistance, where does it send us? Back to the zone. So this candle here, where we reach down and hit the short target, which, as you probably guessed, is based right off of this bullish cross right here. We trade through it, get a little bit lower. Okay. Here's one of those spots where I would not have particularly called for the market to reverse until I saw red and falling turn to blue and climbing, and then I knew, well, now it's a potential. It took 4 30-minute candles for us to break free of the magnetic attraction of the zones. And on the following candle, we ran all the way to the zone, spiked it, touched the long target, which was based off this high right here. And then we closed that 30-minute period back at the zone. Next candle, we go from zone to the long target. Next candle takes us a wee bit higher. Resistance sends us to support. Pullback holds. And that sends us all the way up to the zone. And this bearish cross happened just right below the zone. Okay. And once we hit it, we dropped off. Next 30-minute candle. Found support at blue and climbing. Made a run up to the zone. Couldn't get through it. Came back to rest on the top side of the long target. Again, when trading through a CTA on the retracement. Just like down here, as we traded through on the retracement, the underside became resistance. In this case, the top side became support. There's the 9:30 opening candle. Here's where we had the high impact news at 10 o'clock. That took us all the way through this area. Okay. Got us above the zone. And then we consolidated. The step line has crossed blue and climbing. The price is still trying to go higher. It's fighting right now with blue and climbing. Okay. Now this may be one of those instances where we see price overcome blue and climbing, which means it won't turn to red and falling. But this candle's not over. It's still got 14 minutes left in its lifespan. If we close where we are right now or lower, then chances are we're heading back to the zone and potentially back to the BBC. See that wick sticking up there? It's bearish. All right, crude oil. Now, we got above the highest weekly zone yesterday, but by close of business on Friday, 5 p.m. Eastern, we expect price to be at or below the highest weekly trading zone. It's how it's been now for over 16 years. Have there been weeks where we actually closed above the highest or below the lowest zone on any particular market? Yes, there's been a few handfuls of times. Over 16 years times 50, was that 16 times 52? It's actually, yeah. So the answer is yeah, there have been occasions. Could it happen this week with all that's going on with the geopolitical tension, the Strait of Hormuz, and all that? Yeah. Remember, just a day or two ago, analysts were calling for $100 a barrel. In fact, they were calling for $100 a barrel when I published this as the highest weekly zone. I knew this could happen, but that's okay. I don't change how I do things based upon what the news tells me. I do what I do based on what the chart tells me. Now, if this candle continues higher, you got a bearish cross right here. Call it 75.50. That's potentially good resistance, at least the first time up. And if on that attempt or the next attempt or the next attempt it gets through, your next resistance is going to be right here where blue turned to red. Okay, call it 76.85. Then of course you got the long target, which we hit earlier in the session to the tick. This is where we opened last night, got above the BBC, then we pulled back. That blue and climbing gave us support. Consolidation, consolidation. Then we get the bullish cross, and off we go. But we don't quite make it all the way there. Now, if you come over here, put your cursor right there, you're looking at this right here. Okay? But the long target, what's that based on? Look at the horizontal line on the cursor. It's right there where blue turned to red. We hit it to the tick. Resistance, of course, is going to send the market looking for support, which it found at the zone. Bounced us up to blue and climbing, which became good resistance because it was on its way to becoming red and falling, which walked us all the way back down to the zone, which we expect to be support till proven otherwise. Okay, support sends us up to the BBC, the pullback held. It holds more often than it doesn't. That sent us back down to the zone. Another pullback. Now we're consolidating, but notice that we've not had a candle open and close above the BBC. But as we consolidate sideways, we're going to get more and more blue and climbing chasing price. And the more blue and climbing we have, the greater the potential that we will get a candle that opens and closes above. But you've got this major resistance spot right here. So just be careful. All right, here's gold. This was the opening candle last night. Notice yesterday afternoon we found resistance at the zone, resistance at the zone. Basically, we had to pull back to the BBC that held, but as price dropped, it ran into blue and climbing. So off the open, we did drop a little bit. Then we rose back. This candle opened at 51.10 and had a high of 51.37. So that would be $2,700 per contract traded from here to here. Then we get to the BBC and the zone, that's resistance times 2. But we get through. And ding ding, we hit the long target. Okay. We spiked it. The long target was based right here, right where the black step line did this funny little move. See how we were on the left side of red and falling? And then we crossed. And then we, just look at your charts. That is an unusual area. And this high right here, pretty close. Maybe off by a point. But the long target itself is based off this right here. Market structure. Okay. Resistance sends us to support. Back to resistance, back to support. Back to resistance, back to support. Back to resistance, back to support. Then again, we have some areas here where I would not have particularly called for resistance. There's nothing over here to give me any indication. That's part of the 20% or less. Okay. And until you can accept that, there is no holy grail that promises you you'll never be stopped out again, it not only doesn't exist, it cannot exist. It would defy the laws of science, physics, even God. So it's like looking for a black cat in the dark that doesn't exist. You're not going to find it because it isn't there. It's not within the realm of possibility. Too many factors involved. So we don't quite get to the zone. That's weakness. So what do? We pull back to the BBC. See how blue and climbing directly above price became resistance. Turned to red and falling. Took us all the way down to the zone here at 51.45/46, where we're currently consolidating, which is what happens at a zone 70% of the time. 20% of the time's rejection. 10% of the time, the slice. And last, silver opened here. Managed to get above the BBC. The pullback held. And by 9 o'clock, 9 p.m. Eastern, we hit the long target to the tick, which was based off this high right here from yesterday. Resistance sends us back to support at the BBC. And that support sends us where? Right back to resistance at the long target, which sends us back to support at the BBC. You see how that's just a duplicate move? Hit the target, come back to the BBC. Hit the target, come back to the BBC. Pull back, held, and it held, and it held. And then we finally hit the long target. Got to the zone at 86.16/17. Consolidated. Then blue and climbing. Got directly above price, becoming resistance as it turned to red and falling. And that took price lower. Now, the black step line has crossed red and falling. From here, we should see a retracement to the BBC. If institutional traders are convinced, we'll trade through, but you've got potential resistance right here at the bearish cross, 84.96. If we get through there, you've got a high right there, and you got the long target. Okay. And it's sitting pretty quiet right now, but the step line has crossed. Again, we covered all the markets in their entirety. If you missed any part of today's broadcast, when I sign off, go to youtube.com/CFRN, and you can watch any part of the broadcast or all of the broadcast in its entirety. At the beginning, we talked about the technical reason that the rally stopped on the bellwether. We hit red and falling right there. We got a little wick above it, but we haven't quite touched the daily BBC. Now, this leg and this retracement, the pullback held for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Yesterday, we didn't touch the BBC. Today, we haven't touched the BBC. So, leg, big retracement. I mean, we went all the way up to that 50% fib extension. Now, I mentioned yesterday or somewhere, I forget who I was talking to, I said I was going to adjust these fib extensions one more time. So we've put in a lower low. Hesitant to do that because I just changed the fib extensions, but we're going to go see what that looks like. Let's see, what's the low here? 67.1875. So I'll shoot for 67.19. Oh, that's so close. Oh, you gotta have surgeon hands for this. So that's 67.19.5. What was the low? 67.18. So we're 3 ticks off. I'm good with that. Okay. Now that changes a few things. Okay. That puts the 38% fib extension right alongside the daily BBC. So that's resistance times 2. And you got the 50 here, you got the 62 here, and you got the 100% fib extension. Up there it's 71.85. Okay? But until we get a candle, a daily candle that opens and closes above the BBC without touching it, we're bearish. Even if we suspect and think and hope the market's going to get turned around and go to the moon, And it may. But we're not going to jump the gun. We're not going to make snap decisions. We're going to wait for the chart to tell us that it's happened. See, like over here, candle opened and closed above the BBC without touching it. And look where it took us. Pretty substantial run. Okay. All right. To become a member, email Valerie, support@cfrn.net. Let her know you want to become a member. She'll email you all the information you need to get signed up, and she'll answer any questions that you have. Support@cfrn.net. Okay, let's wrap it up with our good word for today. Sacred reminders. Now we talked about David and Goliath yesterday, everybody's probably best known Bible story from Sunday school and the old felt board. David and Goliath. Now we're moving ahead in the story. 1 Samuel 17:54. David took the head of the Philistine and brought it to Jerusalem. But he put his armor in his tent. Remember we talked yesterday about how he took off the ill-fitting armor. Each time David saw Goliath's armor hanging in his tent, it was a sacred reminder of God's faithfulness to him and of God's power that was available to him. The word remember occurs almost 250 times in Scripture. And there is a reason why. We tend to remember what we should forget and forget what we should remember. That's why God is always telling us to build altars or make memorials. Jacob built an altar at Bethel, where God gave him a life-changing dream. Genesis 28:18. The Israelites took 12 stones from the River Jordan and used them to build a miracle altar in Gilgal, reminding them of how God miraculously parted the waters for them. Joshua 4:20. Samuel built a victory altar at Mizpah called Ebenezer after God answered his prayer and marshaled the forces of nature to supernaturally defeat the Philistines. 1 Samuel 7:12. Without sacred reminders, we could forget the spiritual lessons we've learned along the way. The Bible records the literal weight of Goliath's armor, 125 pounds, 15 ounces. Every time, that's probably about what David weighed. Remember, he was just a little shepherd boy. Every time David took down his tent and pitched it somewhere else, that armor went with him. Why? Because it doubled as a daily reminder of God's faithfulness to him. It was also a great confidence builder. Whatever the future held, David knew that with God's help, he could handle it. There's two lessons here. First, if God did it for David, he'll do it for you. Second, if God did it before, he can do it again. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.